Apollo Global Management Chief Economist Torsten Slok joins us now. And we were talking about this idea, Torsten, that we haven't really seen weakness in pricing on rentals and on home prices. And that obviously plays a big factor in why inflation hasn't come all the way back down to 2%. Is it getting worse? What's happening?
Oh, I agree, sir. I mean, let's not forget that housing has a weight of roughly 35 to 40% of the CPI index, depending on how you measure it. So it means that housing is a really critical component for the Fed when they try to achieve the 2% inflation target. And as you're saying, for housing, it really is the case that we have both supply and demand is still quite supportive for the housing market overall. Supply is still quite weak. Literally all measures of inventory are very weak across the board and across the country. And on the demand side, despite that the textbook would have predicted that when mortgage rates go up in the range of 7 to 8%, they have come down a little bit more recently, and that should have been creating more of a headwind to housing. We've seen still strong wage growth, strong job growth across the board. The demand side also looks quite solid. So overall, the housing outlook still is, as you can see, as Case-Shiller is up 7% year over year. It still is quite a significant risk that it could put upward pressure on inflation over the coming quarters.
But the Fed, but you know, the counter argument is the Fed can't build more homes, can't do anything about the inventory problem, and therefore can't do much more on the pricing side of things. Should the Fed be waiting for more progress on housing before cutting interest rates if these are the factors that are keeping them high?
Yeah, that's right. But that's also why Jay Powell has been talking about supercore inflation. Supercore excludes food, energy, and housing in an attempt to say, well, housing we can't really control. So let's try to take that out of the equation and remove that from the index. But when you look at supercore inflation, the problem is in the last 3-4 months, that has begun to reaccelerate. Supercore inflation is everything else than housing services. So that's airfares, hotels, restaurants, concerts, sporting events, auto insurance, medical services. The service sector is still having quite a tailwind, not least because of the $9 trillion gain in the market value of the S&P 500 since the Fed turned dovish on the November 1 FOMC meeting. So the tailwind to consumption and particular consumption services is just really strong. And that's the challenge that supercore inflation has also been moving higher. So yes, housing is maybe a little bit more challenging to control for the Fed, but what they can control is broader consumption, and that is still quite strong, and that is the challenge for the Fed as we look ahead.
So, I mean, supercore worse in the CPI number than the PCE number. What do you expect from that later this week? And you expect it to tilt expectations for what? What are we looking at now? September as 50-50?
Yes, so as you know, of course, the market is now pricing only one cut this year, namely in September, and then no more cuts. So that's why, of course, as we all know too well, from the beginning of the year saying 6-7 cuts to now saying only one cut, it's quite a dramatic turnaround. And when Kashkari overnight is now saying that he's not ruling out rate hikes, so I don't expect rate hikes for a number of different reasons. But I do think that the fact that he's even talking about the rate hike should not be ruled out, that is just telling us that the tailwind to the economy, not only from easy financial conditions and the stock market has gone up, but also let's not forget that we also have a significant tailwind from the CHIPS Act, the Inflation Reduction Act, the Infrastructure Act, fiscal policy, and easy financial conditions are really still the main risk that this economy just continues to power ahead, and therefore inflation not coming down to 2% as quickly as the Fed currently thinks.